So I will get started here. I know we're recording, so if we are able to edit this thing, then I will start now. But thank you so much for joining. I just wanted to be able to provide my perspective of some of the things that are happening, more specifically on how to take action and moving forward with this migration process. For those of you on this call, I am going through this process myself. It is really extremely painful. I'm running into the process of having to pay for services that I feel I already paid for. And in doing so, it's very difficult. Now, for background, I basically had approached Assure because I felt like they were the most sustainable platform out there. I felt that they had the most volume. I felt that they had the most experience. They were doing so in a cash-based basis or cash flow basis. And in this failure, it's caused me to question a couple things. And I just wanted to share some of the things that I'm thinking about as I'm going through this myself. So first and foremost, the question that I asked is, or the principle that I just wanted to highlight is that we are very early in the history of the life cycle of SPVs. This is the early days in what we want to talk about. When you look at who are the players in the market, there are very few players that have more than 3 years of experience in the industry, Assure being one of the few exceptions. Even Angellist and Assure, who started this together and getting regulatory approval, Angellist just started bringing this house about 3 years ago. There are new entrants that have come to the market. There are fund admins that do sidecar vehicles, but the complexity and the number of SPVs there. The thing I've caused a question is this model sustainable? I think many people are out there saying this model is not, especially many of the fund admins. I do believe it is sustainable in evaluating and looking at all the assumptions. I think it's sustainable in 3 different forms. The first and foremost is the fund admin approach. The fund admin approach has not failed, and it's continuing to be successful because they understand the cost of their people and their time, and they refuse to take on any clients unless they understand that they have the capacity to handle that, and they know how to appropriately price that time, and they create good processes to do so. The second way in which I see that it's sustainable is either a tech-enabled or fully automated platform where you are either using technology to augment the time required from individuals, and therefore you have the best processes to do so, or that you are fully automating and believe you can fully automate from end to end in order to handle this process. And then the third way that I see this as model being sustainable is functioning SPV service as a means to an end. So it might be a break-even business or a slight loss business, but a provider might justify doing so because it leads to the growth of their customer base. Specifically, such services include fund admin, that they are gaining great profitability in fund administration, and that SPV provider or syndicators are the entry point there. Second might be cap table management. Third might be interest in something bigger like a secondary market. Or fourth is even a marketplace model where their goal is to get as many investors onto the platform as possible. Therefore, they are monetizing those customers or investors on the platform. So I do believe this model is sustainable in the price structure that Assure has historically set. And then third and foremost, kind of the principle that I want to jump to, which I've gone through quickly, is that each provider in the industry is an administrator. Therefore, when you view yourself like a GP or as a manager of these funds, it is your responsibility to manage the process of your administrator, to have the documents, to move forward. However, you are choosing their specific process when you choose that administrator. You aren't not going to go to an automated platform and ask them to provide you a significant number of custom settings and ability. You're not going to go to a fund administrator and ask them to change the way that they've been doing it in many scenarios, but they will continually try to improve. So those are the 3 principles I just wanted to go over before we get started about we're early in the life cycle of SPVs. This is a sustainable business model. I truly do believe that. And third and foremost, that you should treat administrators as such, as administrators. That doesn't mean they're less. That doesn't mean they're not experts. That just means that it's your responsibility to take over as manager. Second, the important things to evaluate what matters to you. What matters to you and me as we're going through this migration or this process, this headache, is specifically control. Control, I'll go through all of the 6 things that I think matter. First is control. The second is the legal process to move these assets in the appropriate fashion. Third is the platform evaluation. Fourth is talking through the taxes, understanding what's next. Fifth is distributions. And then sixth is any communication with your portfolio companies in the appropriate manner. I do put that last because it's important. So I'm actually going to stop sharing my screen because I had a presentation, but I felt that it was important to just talk about the things that are most important rather than speaking to what's on the slides. So the reality is that first part of control has to be done relatively soon. So when I'm talking about what that means, I'm talking about becoming the manager so that you have control over the legal process and whatever is going to happen next. I recommend doing so before the end of the year. I have gotten confirmation that there'll be signatures from the Assure side even after the year, but personally, I'm not risking that. There are things that need to happen before the end of the year. If you have bank accounts, they need to be done. If you want to get documents downloaded, you need to do that before the end of the year. If you want to, if you have money sitting in the bank, you have to get that transferred out. And we can talk more about that as we move forward. But first and foremost, you need to get control of these entities. Second, it's the legal process. Now, the legal process Assure has recommended is the division process, is what I will call it, using the templated forms to go through that. I've gotten very conflicting legal advice from different lawyers about other means and methodologies to move those over. And that can be difficult for us to navigate as we're getting these conflicting advices, but it speaks to the age and the lack of case study with this asset class or with SPVs in general. There are 2 main schools of thought here. First is the division process that Assure handled, and I know and guarantee that they will be able to basically sign those docs because they said so. The second is more of a transfer where you're actually creating a new SPV and transferring the assets of the existing SPV under the new one. The complex thing for legal is if it was a larger deal where you already had a master series LLC, that is actually relatively easy. If it was a larger deal that it was its own standalone SPV, that's relatively easy. If you're like me that had a large number of entities under the Assure masters, or specifically for me, 3 Assure masters, that can prove to be a little bit more complex. And that's why we're getting such differing opinions, whether you can move it under one single master series LLC or not. For me, I'm probably going down the route of the division. Because I know that I can gain control, because it's my #1 priority of gaining control of these entities. And I'm pretty confident that Assure will be signing that. So control, legal. Second is evaluation of the platform. There are many providers. If you're just joining the call, you should go to the Q&A section here. I provide a link to a shared document where I evaluated every single provider and platform out there. In this third point, I want to, if you go to the Q&A and the answered section, that's where you'll find that document. Most of you probably aren't even listening to what I'm saying because you're just looking at that. But in evaluating a platform, this process that you want to think through is, if I have a platform for this, then I'm probably paying some sort of migration price or platform fee in order to use it. And I'm using that for investor updates, communication, housing of documents, and then I may also get additional tax services. Some people are using other forms to communicate with their investors, and a platform may or may not be necessary depending on what you're there. Someone's mentioned that they're not able to see the shared spreadsheet. If you go to the answered questions here, you should be able to see that. The fourth thing to look at is the taxes. This is where most of the cost will come from in maintaining these entities that we have. The taxes are there. Again, I'm getting very conflicting advice in all of these aspects. And in doing so, each one of those is specifically the standard. Sorry, I'm looking at some questions. I should ignore those. Looking at the standard here of, are taxes required, specifically filing taxes, and then secondarily providing K1s. The differing opinions are that there's actually 3 different opinions. One, which is the standard that you only need to file taxes when there's a taxable event, ergo an interest or a gain or some sort of distribution or exit at that time. And in doing so, that's when you need to actually file the taxes and provide K1s, only in that scenario. The second is that you don't need to provide K1s if there's no taxable event, but you do need to file with the federal government, or file with the IRS, I should say. And that is the second opinion. And the third is that you need to do so each year. Much like when you're evaluating, talking to lawyers, you have what will be the opinions of these professionals. A lawyer will always give you an opinion, and your job is to evaluate the business risk associated with it. The same thing with the CPA, as you're evaluating what is the stance that you will take, and that's a matter of doing it. More or less, the industry standard that Assure has set is that you only need to file taxes and provide K1s at the time of a taxable event. Many providers are following that same stance, but you may want to clarify as you're evaluating each one of these providers. Next would be the distributions. Luckily, none of us paid for distributions ahead of time. And our LPs, as well as ourselves, were set and ready to pay for the distributions upon a successful exit. Most looking at contracts probably had some sort of cost around $2,500. When evaluating that, very few actually quote the distributions and looking at that. Some providers will include that in the cost that they've done, but most will charge a typical cost of as low as $500 to as high as $5,000, depending on who you are talking to. I would review your contract with any SPV provider in looking at these distribution costs, because many times it's not in the quoted number that they give you, much like it wasn't for the Assure process. So those are the things to think about and evaluate for yourself. Having control, making sure you're going through the legal process to move these over under that control, evaluating whether you want a platform and which one, making sure that you're appropriately handling taxes with the stance that you feel is appropriate, and then having the distributions. And then finally, maybe communicating with the portfolio companies if the updated entity or EIN of the new entity, depending on once you get those moved over. So many of you probably have been toggling through all of the analysis that I've done in the shared document. I wanted to provide this in a different lens. Most people, when asking me, they want to say, well, what are you doing? And what's the way that I should be handling this? And the reality is it's custom to you. I don't believe there's one answer that's right for everybody. I've tried to provide what I believe is an overview of every single provider with as much detail that I think I would need in truly evaluating this. And I hope to support the service providers that are getting so many inquiries that they're spending more time providing information, and they can spend more time with customers that actually would self-select to have the services they would like, as well as help many of you that are trying to navigate this process and unsure. It's very difficult when we're comparing apples to oranges on pricing models, on legal structures, on what to be handled. So I provided an overview. I've tried to categorize each different provider out there. In this process, you'll see that I tried to categorize them as either SPV administrator, or a tech-enabled service, or a platform, or they're a marketplace, or they're coming from the fund admin world. And this gives a little bit of context, as well as something that I've done is I've provided what I believe to be their experience, the number of SPVs that they currently are managing, but also maybe the experience of team members and how many life cycles of SPVs they've really handled. I don't believe that anyone has actually gone through a full life cycle here when I look at the 20 different providers that I've evaluated. I truly believe that Assure was the only one that actually had that experience. And even still, when you talk to customers that have been through that, there were both positive and negative experiences in going through that. Other things that I evaluated, let me just go to the document, because this might be the time where I want to provide and highlight what things I think matter. So let me go to the Q&A here. So let me share my screen. So as you can see from this process, this overview, I think, gives a really good perspective of all the different providers, where you can see their websites, what they're doing. And I tried to put in different categories of these different providers, like your generic fund admin group, so that you compare. I think most fund admins probably have been through, 3/4 of an SPV lifecycle where they've done sidecar vehicles. But the reason why I don't believe they've done more is because have more experience is because the unique nature and the frequency of sidecar vehicles just not being so great compared to these SPV providers. Also, maybe providing the self-service K1 process, that might not be the way to do so. Additionally, having your own legal counsel. There are groups here that I might highlight, Qualitas, AM Advisor, many of these other providers that will handle migrations that will help you through that legal process, but maybe due to volume might not be able to help you one-on-one, where you might go to one of these providers that's specifically an SPV admin to help you know what forms to fill out and how to go to, or go to your specific legal counsel to do so. Additionally, you might have your own accountant, because you might need the self-service versus the end-to-end providers that look more like these groups at the beginning, to fall under and support you through your process. So I know I'm jumping all over the place, but there is an exorbitant amount of data that I've tried to put together. Specifically, the most important to you is highlighting which groups are actually handling migration. I've tried to highlight which ones really are there, and in what manner they're going to be handling this. I might highlight specifically Sydecar here, because they recently announced more or less finding providers that would support this, where historically they were not going to provide doing so. Allocations being listed as the provider that Assure mentioned would handle those, highlighting the potential capacity to handle the number of these. These numbers have been changing even up till yesterday, where I had 2 providers updating pricing. This is really hard to navigate for myself and each of you, and I will be sure to try and keep these up to date with any new piece of information that I get from the industry. When I tried to create 2 separate processes, evaluating migration and evaluating new deals and what platforms I might use it for new deals. It's really difficult to separate these two, because the switching costs of making your investors go to one platform versus the other can be a higher lift. And additionally, I'm seeing that this process of migration, it has some nuances that are different, but the same thing that I'd be evaluating for migration, I would be evaluating for new deals, which I've added here, which are a different light than most of what I get asked. Most of what I get asked about is cost, but I've put in some other categories that I think are really important. Do I think this business model is sustainable? Well, if I want to evaluate that for each company, I'm going to talk about, did they take on venture money? What are their expectations for growth, basically? How much venture money have they raised? How much time do they have in business? And how much focus they have on being profitable? I think those are important things to evaluate. I anticipated that one of the venture-backed SPV providers was going to fail before I ever saw any potential failure from Assure. Second is pricing. Obviously, this is something that everyone's trying to evaluate, as we've already paid for services, and these are either costs that we will take on. For me, I'm taking on personally these costs for my investors, or secondly, that my LPs will have to take on as I'm thinking through that. Third is the legal setup of, will they handle, the Assure built a new infrastructure of becoming the manager for these SPVs. This is evaluating, do you need to bring your own master series? Do they have an existing master series that you could move under? Now, the benefit of if they already have a master series that you can move under is you don't have to take on that cost. The negative might be control concerns. Some providers are now finding ways to have a master series that you can go under, but where you would be functioning as the manager, and therefore you would be the one signing for future documents that have right to the cap table viewership and everything that many individuals would ask for with that control. I've tried to be as comprehensive as possible. I know that I'm missing some information on every single one of these providers. If you have more information and want to provide it, I would love it. However, I will, basically ask you to tell me who you are, because there's so many misleading information that I've gotten, either from investors of other platforms or from service providers or disgruntled customers. All of these things are really hard to, think through and navigate. So letting me know who you are is really helpful so that I can truly evaluate that. It's been really difficult not to tie myself with one of these groups that would benefit me personally significantly. I had opportunities to basically not pay anything out of cost in order to move these things over. But I feel the need to stay neutral in this evaluation because I didn't see that neutrality being provided out in the market. I evaluated banking. Do they have other investment platform? I need to clean this up. I wish I would have had more time to provide a card more or less on every single provider. And I hope to do so by the end of January. But I need to get this out as soon as possible for each one of you as you understand the timelines. But I break down as well as the user experience specifically on the platform. I'm trying to talk about the features and the functionality that others may or may not have. And this will, I think, provide a little bit more parity in the space so that we can understand what providers are out there. When I highlight user experience, there's a few that I might highlight that I thought had exceptional user experience. Angellist, which has the most experience, I think has one of the cleanest experiences, as well as Canopy, and as well as SPV Hub. These are really exceptional experiences for helping you as an organizer with the marketing and the things that you're doing, as well as the experience of your specific investors. Now, that's not to say that the other groups aren't amazing. Those just had unique offerings that I hadn't seen. For Canopy, it was specifically marketing tools for me as a syndicator that would make my life a lot easier. Now, Angellist has definitely one of the cleanest experiences, but the negative being that they are basically the Amazon of this space, where I don't have a relationship with my investors. And therefore, I don't have, as a consumer product brand, if I went to Amazon, I don't have the direct communication. I'm going there because it's a good experience for my investors, but not because it deepens my relationship or my ability to be there. They are a marketplace, and therefore they have incentive to communicate and reach out to all of my investors. The reason I brought up SPV Hub as an option is they had a mobile application and a texting capability that is exceptional that I've never seen in this space. That would be ideal for many groups that are running in-person angel groups. I highlighted just user experience because that's just one other aspect to evaluate, as well as the investor onboarding. I want to also highlight the customer support side of things. This is something that's really important for some people, the ability to communicate with their provider. The fund administrators are probably one of the best here, or those that have dedicated account managers. That is a really unique approach. With that, it probably means that they have more people and therefore will be pricing things appropriately, maybe even a higher cost. Having a chat support, having customer success team, having a tax team you reach out to, all of these things are things to evaluate. And as well as, do they provide real estate functionality, receipt of funds, fund admin, in cap tables? There are a few other things I'll just point out here at the bottom. These are other resources, specifically other SPV providers. This is another group that created this. I found it really helpful, although it wasn't as comprehensive with the number of providers out there. Some tax stuff, specifically around 1065s or K1s. Strut Consulting did a great webinar on the high-level summary, but again, it's less specific about the providers, as well as their goal to try to be a little bit less, understanding their incentive is to consult on this process. And then Venture 360, who has good experience in the space, provided legal opinions about the division process versus transfer process, and ways to potentially handle that, again, with their incentive to try and help you. But I think that each one of those resources were really helpful. I'm now going to start answering some questions. I'm specifically going to highlight first the questions that you have that might be related to broad principles in SPVs in general. Second, I'm going to talk about any of those things that matter and questions associated with the timing of, the control or legal process or taxes. I need to declare I'm not a lawyer, I'm not an accountant, I'm not even a financial advisor. So please, understand that these are recommendations of what I'm learning and having talked with all these providers. And then finally, we can answer any questions about specific providers or specific categories of providers, like these venture-backed SPV admin providers. That would be kind of the way at which I'm going to handle questions. So feel free to type any questions. I will try to get out there. If there's one that needs clarification, Matt may be able to help me promote someone to be a panelist to ask that question. So looking through at the open questions, what about franchise fees on these entities? So openly, California is very, very complex. I personally can't opine on this. I'm not qualified to be able to talk about legal law in specifically California. I think that you should advise, try and find the right person to advise you. I wish I could. This is one of the few questions that I just don't even have an opinion on, nor do I want to have an opinion on it, because it is very complex. And interpretations, again, can differ in this arena. So I apologize, Tim, that I'm not able to provide more details on this, but I would love to do so. Additionally, if you're a provider on this call and you see some information that's correct, feel free to adjust. I want this to be accurate. I don't care. I'm not trying to gain anything out of this. I don't care which providers people pick. I just want them to be informed in what they're doing. So the anonymous, did you get this info from providers directly? Some of it isn't consistent with what I know personally. Yeah, it's a great question. A lot of this information I got from specifically the providers, customers, and or individuals that were there. So, or the websites, I should say. And some of it being my interpretation as I'm categorizing experience, categorizing the type of providers. Openly, some of this information is changing. Like I said, even as of 2 days ago, I had other people talking to me. What is my name of my company? That doesn't really matter. I'm not here representing anything to provide anything. I just am going through this process. My life's been living hell in trying to do so. And so my job in doing this is trying to provide greater insight to how you might be more informed in making this process. So for the anonymous person that said that this information doesn't look the same as what they are seeing out there, please tell me. You're likely a service provider. And so tell me how you think this might differ. Openly, if you think that the model is different or inconsistency or amount of money raised, okay, that's fine. Please tell me. Again, I'm not taking any liability. This isn't me disclosing anything or providing defamation of any group. I want the industry to be better off as a whole. So please tell me. Following down here, as an organization, what part of the fund admin do you think is most difficult? That's a great question. I think the difficulty is balancing multiple things. You're balancing how do you make sure that you are making money, right? Every business wants to be making money and growing, as well as managing certain things that are, I would say, taxes prove to be continually difficult, especially with the number of complex assets that you handle. When you look at the providers of who handles multi-asset SPVs, those taxes become much more significant. So I know taxes are really there. Technology and the expectation, now that venture players have come into the space, the expectations of customers with technology is very high. And therefore, those that have historically run in the service model try to maintain or try to keep up on the technology side, while those on the technology side that have raised venture dollars need to grow their business such that they may keep up And so there may be ability to have more team members for communication and customer support is really difficult. I think that's the balance of all three of those become very difficult. I think that's one of the reasons that we saw, maybe customers leaving Assure and or the failure of the processes is you started to see the investment in technology and the focus on technology as well at the same time try to invest on people and providing communication. Moving forward, what were considerations that organizations should think through when creating their own master series versus using a provider master series? I think it's a great question. The benefit of creating your own master series is that no matter what, if that provider is there, you're not going to be in the same position that you're in right now. So if you plan on doing this consistently, I think the route to create your own master series is something you should think through anyways. It allows you that no matter what, you could just transfer to a new provider in no matter what happens. The benefit of going under someone else's master is it significantly saves you in cost. Nothing's going to change with the structure of whether we will or will not use master series LLCs or LPs, which some providers provide. But I think that the way in which many are handling those will change. Some providers will allow you to be under their master series, but require you to be the manager so that you have control because they don't want that burden of extra services, extra time to handle those things. But your job as the manager is to inform the administrator of everything that happens. Otherwise, they may not be very accurate at handling taxes, moving things forward, having all of the correct information. So the two things to evaluate for you is this a consistent behavior that you will be moving forward on? And is it worth that cost? In creating a master series LLC, you'll file a one-time cost with the state, and then you have to maintain that entity every year. We talked about it initially. If you are moving multiple master series, then you have to create multiple entities and maintain all of those master series for multiple years. So those are the things to consider. The allocations data is accurate. Okay, good. I mean, I think I got that one yesterday, so I'm happy. What are your top 3 firms today based upon the provider levels of comprehensive services, emphasis on the admin side, not the marketing side, that would most closely mirror Assure? So Dan, based upon this question, you had a positive experience with that. When looking at where you would have the most service, the reality is when you go to I would look at the types that call themselves fund admin platforms or fund admins or SPV admins, because they would provide the most responsiveness on the ability of how to handle things. So when you're looking at the marketing aspects, they tend to correlate really heavily with the platform types. I'm really, trying to navigate and not be too comprehensive and looking at each one of these specific providers to say, hey, this one's really good and this one's not really good. I think that when I'm looking at this and I'm trying to figure out what would be the best customer experience, I think any fund admin understands the importance of you and your investors and giving responsiveness. So I will say that. But all fund admins will probably be a little bit higher priced because they're focused on exceptional profitability, as well as SPVs are a little smaller than they're used to handling. So some of the groups that I think that you might have, I might highlight that would provide exceptional kind of customer support are either those new players in the space. So Veravent, SmartFund, who else? 212. Some of those would be very new and very anxious to support you because they are trying to launch and be very involved in this business, versus the SPV administrators would be more consultative in their approach with a little more experience. Again, I would point to kind of Qualitas, AM Advisor. PropelX used to be a customer of Assure that built their own process. probably falling under a little bit the higher price. Formidium is a fund admin. This is a little bit newer to them. SPV Hub was created by those that were running their own angel groups, so they would also understand many of the things you're going through. Syndicately came from a family office under the same. I might not highlight the two here because of their focus on creating platforms with Rails that if you want customization, that's probably not the right fit. They have ways to customize inside of the Rails, but maybe not as much support. Finally, definitely falls under that category. They were a customer of Assure that created a solution, brought it in-house a couple of years ago, but they just basically launched publicly for others. Savvi Legal is really good for customization and support on the legal and technology side. Allocations also fits under that, where they have a large number of experience here. But again, that's just that lens. I would generally say I would prioritize the different categories for myself and saying, what do I care about? Do I care about sustainability, pricing, and customer support? And then try to evaluate using those three criteria. If I just use one, I find that my decision is a little short-sighted in who I might use. So I hope that that answers that question, and can jump through that. Let me mark through a couple more of these. Okay, so thank you. Yeah, finding a boutique CPA to handle taxes. I've gotten this question a lot. I think that that can be the case if you know someone or you already have the existing offering. That can be very helpful in having a dedicated CPA or a dedicated firm that has experience here. It can be more cost friendly as well, but it only really makes sense, and you probably only get their business. They will probably only accept your business if you have a large number of SPVs, or if you have such a close relationship that we will do it out of a favor. Otherwise, if you're doing anything under 10 SPVs, it's almost always a dedicated response that you would need to go to a provider or a platform that will provide it in-house. So that is something that I've talked to different people, and so I will definitely let you evaluate that for yourself on whether you would call it insourcing your own accounting firm, or find your own provider. Yeah, specifically, I'm not going to tell you what I'm doing with my deals specifically. I'm telling you I'm paying for it out of pocket. The reason is such is I don't want to bias anybody. My criteria are a little bit different. I fall under the category that I am going to create my own master series LLCs and move these entities under that. And then for the other processes of platform, tax, and distributions, I'm going to move forward with what I think is the best decision. I apologize if I'm not declaring that. I want to not bias people towards any one way. And I think that what my solution is may differ from others. Yes, I shared the Google Sheet, Jim. I apologize. If you go to the answered questions here in the sheet, I will share it publicly as well. Please do let me know if there's anything that you see that's wrong with the provider, and I will update that. What is your intent of this call? I thought you were selling services like Assure. I don't hear that. Nope. Literally, I am doing this because everyone is calling me and I can't handle all of the calls that I'm handling to help other people navigate it. I'm doing this to give every possible information. I'm doing it because I think it's the right thing to do. I feel a sense of stewardship for the SPV industry. I think that providing this will give more benefit to all of us, that the providers will get better. I shouldn't say us in that. I don't want to be an SPV provider. I'm genuinely here because I needed to solve a solution and I couldn't sleep for the past 3 weeks trying to do so. And I empathize with those that don't have as much experience or knowledge as I do in this space. And so if I can do anything to help those individuals navigate what to do, because they have about 2 weeks, yeah, that's really difficult for me. So that's pretty much what I care about. I'm not a consultant. I'm just trying to solve the problems for myself, and hopefully others are able to do so as well. There's incorrect information. I will reach out to make sure I adjust that for AM. Thank you so much for providing that. We're coming up here on some time. I'm happy to answer any additional questions. I know that I have most of the information in the sheet, so you probably don't even need me from now. Hopefully I've empowered people to kind of navigate a lot of these situations. Please do ask any questions or raise your hand if you have any other questions. I think that this is as comprehensive as I could possibly be. For those on the recording, I apologize that you're not able to see this whole sheet. I will be sure to put a link to it when I post this directly on YouTube. I lean into situations that I see where others are having difficulty, and I know how difficult this has been for me. Some of the things that I'm going to highlight a few things about each provider as I go through this, just because I think that it's helpful. Specifically with Vauban, I think, when you look at sustainability, the fact that they're backed by, acquired by Carta, they do have a lot of experience. I view them as the most assure-like provider out in the EU, and they entered the US market this year. They provide in a pretty reasonable, affordable cost for one time to handle everything, kind of an easy button there. The allocation side, they again have a large number of experience. Everyone came from the Assure tree, honestly. Like, they used to be a customer of Assure, and they created their own solution, and they provide a lot more of potential for complexity for multi-asset SPVs for different structures. They tend to be more able to handle those type of things while still maintaining the tech-enabled services that many people want with account representatives and whatnot. They are obviously having a large volume, and each one of these, let's be clear, it's a very difficult time to onboard all of the customers, and they may choose not to support you or me with what our desire of who we would like, which might be why you want to highlight 3 of the groups that you think best fit you. I'm going to highlight Savvi Legal, that I was very impressed with their technology and the ability to customize legal docs or implement those things. Your ability to go to them, get support, have the process there, really, really impressive. Their ability, though, to handle the accounting is not there. They have a preferred provider that they can provide the taxable support or allow you to find your own provider. Venture 360 is somewhat similar to the Vauban offering from a price perspective, with also a pretty substantial experience here. They come from more of the fund admin world, but this offering being a light touch experience for the SPV, they view it as kind of an entry-level product. Finally is probably the best if you're going to piecemeal your offering. Going through this structure, their ability to customize their offering for the type of SPV you're doing, you can tell this a lot of time was spent in building that. Unclear about what that means from a technology side, because it's relatively new, but still a really impressive offering. Sydecar and falls under the category of those that believe that this industry can be automated. And in doing so, they will force people into relatively simple rails, but in doing so, they can talk about the speed at which they're handling it. Definitely something to consider for new deals. As I talked about, they're not really providing these services, but have providers that they've identified that they've negotiated pricing with to try and help individuals. They will allow you to basically use their platform if you want a place to house your documents. But that's a little bit different than the true migration. Canopy is going through this process. They also fall under the automation perspective. I talked about already highlighting their specific marketing tools of making my life easier as a syndicator to know who's interested, who I should follow up with, getting information out, and marketing the deal in that sense. Flow, I probably have one of the least amount of information about Flow. I believe their long-term goals are more about API enablement to allow other platforms to be plugged into. And I view them as a little bit more of a front-end solution with the long-term goals to get into large institutional clients and banks moving forward. So I can't speak too much to the specific offering, but more about the intentions of their platform. Syndicately, I talked about the history coming from a family office. their ability to handle this migration, their willingness to look into it. We talk about the pricing, not too crazy. When you add about taxes, maybe not the most price advantageous, but really definitely an offering to consider as they've done these things themselves. 212 was impressive to me. Although they are relatively new in the space, they have experience in the cap table management, and they are being very open to zero migration costs potentially to go towards them, with the additional K1s being the opportunity. Now, they don't provide these in-house, they have a preferred provider, which would allow you that if you have your own provider considering migration to their platform, or bringing over, to their platform as a place to house your investors, might be interesting. They also provide a really cost-effective cap table management, which long-term would lead to the piping in of data that I see is what the industry is going to go towards, as cap table management or cap table information is piped directly into the SPV platforms and providing returns. SPV Hub, I talked about, coming from an angel group, their text and app applications are really interesting. They're willing to take on some clients, not necessarily high cost or low, they're kind of right in the middle. I think this is pretty reasonable in what they're doing. And I think that they're really kind of just building this because they were solving their own problem. Formidium comes from the fund admin world, really more focused. They're one of the largest Web3 fund admins. And so they really focused on coming from the technology lens. SPVs, they are moving downstream to handle SPVs. Odin is more known as an international fund admin provider. PropelX will take on you as a client if you have a large number of SPVs and you understand what you're doing. We're talking about knowing what an ERA filing is, that you've been doing it. You have your own master series, or you could live under theirs as the manager. This information I was told is incorrect on AM advisors, but they came specifically from the Assure tree with experience on specific, real expertise on handling this migration process and building out the solutions to support for any future admin deals. Qualitas, also an offshoot of individuals with experience here in the admin side from Assure, also focusing on really helping people through this process. These two groups, again, highlighted as probably your best handhold group through this process if you're not using your own legal counsel. Nth round, I wasn't able to communicate with. SmartFund is a brand new provider in the space. They're launching right now. They're aggressively trying to support and help people there. They're very much in the technology world. I would talk to them. Loon Creek is a fund admin. They will selectively accept people moving over. And Veravend is one thing I just want to highlight. If you have money with Assure bank accounts, I might consider reaching out to Veravend, especially if you're an international individual where you find it difficult to get a bank account. BankProv, Grasshopper, Mercury Bank, Silicon Valley Bank are all banks used by providers in the SPV space. Veravend is also a new solution that those are integrating. I will likely see them integrate directly with other service providers in the SPV space in the future, but it's something to consider and talk to, especially for those of you looking for banking solutions or finding your own bank here also. HC Global is a fund admin. They've recently just entered the space. I had one of their customers reach out to me. They have unique pricing where they mostly put it on the back end, which is very unique. However, I haven't been able to talk to them or just talk to their customers. Dealum is a really interesting front end platform, Templum as well, and then a few other groups, Wealth Block, that I might highlight here that you might consider. So I apologize for all the detail there. I will go back to questions, but I just did feel about the process. Can we talk about the upcoming dates that are important? Yes, so I already identified this at the beginning, that you taking over as a manager of your SPVs by December 31st is really important. It is potential that Assure will sign those documents after those dates, but I strongly recommend, as well as the cutoff being January 30th or December 30th, for getting any money out of bank accounts. That is something that is really important. March 15th is the next date for SPV tax extensions are due. So you need to figure out a way and a solution in which you will be either extending, which pretty much everyone will. The other thing I would just like to highlight is, before I conclude, is when people talk about migration, what they really mean is taking control of these entities and then moving over to the platform. The process of taking control and the legal process to do so can happen more immediately, whereas the process to move over to the platform and getting all that data moved over will take significantly longer. So I don't think anyone, when we talk about this automated, I don't think any provider is committing to this being a smooth process, but I can guarantee that they will all be trying to help in moving forward here. Thank you. Would I share my personal email address? Well, I think this is here. I would love to just maybe facilitate those through LinkedIn, trying to stay out of as much of the personal one-on-one interaction as much as possible, just because it's just so much. But I'm happy to connect. And if you have a specific question, we can chat offline via LinkedIn, or maybe I'll share my information at that time. Any experience or feedback with Formidium? Personally, I have not used them, and feedback specifically, I've had some groups talk about moving away from them on the fund admin side, but I think that every administrator is comparable to a referee and umpire, where if you're good at your job, nobody hears about it, but if you're bad at your job, everyone talks about it. So I think that inevitably you're going to find negative feedback about every single one of these providers at some point, because in reality, it's about picking the provider that fits the way you like to do things. And many people just pick with short-sighted goals on price or on speed or on somebody they know, rather than picking for what their goals are. Yeah, I would love to talk to the nth round founders if that'd be very helpful. You use it for LP reporting. That's great. Thank you for the feedback. Thank you everybody for what we're doing. And I probably will not be enabling this to be downloaded or copied, if that's okay. I just want, feel free, I will share it publicly, feel free to share it around, but openly, I don't want people coming up with their own solutions, or more or less put hours into this to just take credit for my work. That's the only thing I would say. I'm doing this out of goodness. I'm not forcing people to pay it, but I am going to be using this information as the master of truth. And I just kind of don't trust anyone else to do so, because I think when I've evaluated the ecosystem, there's been a lot of lack of transparency out there. And I think this transparency will be good. I don't care that I'm in the center of it. I could care less whether I'm there. If you want to be involved in this process and think you can add and we can build trust, I would love for you to do so. Thank you. Oh, shoot, more. Okay. Okay, I think, thank you, everybody. I think that's it. Apologize for the informal nature of this, but appreciate you guys joining. Have a good one.